Welcome to another episode of the Market Makers in Middle East and Africa podcast. I am your host Abrar Hussain. Today I speak to Ziad Chalhoub, CFO at Majid Al Futtaim. Ziad, welcome to the podcast.
Thank you, Abrar. Great to be here.
Yeah.
It's great to be here.
Ziad, you're a CFO of one of the largest conglomerate in the region, which is having significant impact on the economy and on the people. Tell us about your story.
So I grew up in a technology company. My background for 16 years prior to joining Majid Al Futtaim was in the US and with various international roles behind it. When this opportunity popped up, it was incredibly interesting to me because of the unique nature of how these businesses run. So Majid Al Futtaim is a large conglomerate. It's a lifestyle conglomerate, fundamentally. You have shopping malls. You have retail, grocery retail, you have cinemas, you have fashion, and within fashion now, what we call our lifestyle brand, you have home and some other brands. So what's unique about it is all these businesses are fundamentally co-located in physical assets. This is not normal. Like if you look at it on a global scale, I think we're one of the very few companies that have this breadth of a portfolio where it brings everything, not only physically together, but digitally together. And when you think about the art of the possible with how the world is transforming and becoming digitally enabled, it draws an incredible opportunity for growth and for continued expansion and changing people's lives, creating great moments for everyone every day. The mantra of the company is something that I found incredibly attractive. And moving to Dubai was during COVID, but we always knew what the region's potential was, and I guess we just got lucky that we came at an incredible time to enjoy all the fruits of the investments past that the region, the country have put forward, and it's been a great ride for the last couple of years. It's been almost 4 years now that I've been in the role.
Mm-hmm. Ziad, as you mentioned briefly about MAF, it's a large conglomerate with diverse interests. Tell us more about MAF and what's the grand mission or vision of the group?
Going back to the mantra, it sounds really simple, creating great moments for everyone every day. But fundamentally, it's all about delighting our customers. And when you think about the grand vision, how do you create that seamless experience of a customer walking into your mall, then walking into a Carrefour, doing their grocery shopping, sending their kids to watch a movie or going to Magic Planet. And you repeat that over and over again. So if you look at our strategy and what we're trying to do as a business, from a regional perspective, we're really focused on the GCC and some countries within Africa, Egypt, Kenya, etc. And from an experience perspective, when we look at these particular customers coming in, how do you provide them the best experience from when they first park the car, when they walk into a mall? How do you create an environment for the tenants to continue growing with you? How do you get the best assortments with grocery retail and in this very competitive environment? When you sit in a movie theater, how do you give them that best experience and how do you make them buy the popcorn, where your margins are? So it's creating great moments for everyone every day with a regional focus. And we've started to expand even beyond that, where we started years ago actually in the residential real estate investment. We had a project in Oman called Al Moj, which was wildly successful, but it was localized in Oman. We have Tilal Al Ghaf and Ghaf Woods that we've rolled out and have provided to be a huge success. So we continue to diversify the portfolio for MAF in a growing region, which has been highly successful to us.
Mm-hmm. Ziad, as you mentioned, there are different interests and different divisions, right?
Yes.
And as a CFO, how do you manage the financial strategy for these different segments, and how kind of you see the growth versus the risk, and how do you manage it?
Okay, that's a really good question. Fundamentally, we are, so just to take a step back, we are the only private company in our sector that's investment grade. So we're triple B rated by S&P. We're investment grade with both Moody's and Fitch as well. Now, being investment grade gives you access to cheaper capital. And being investment grade is something that you don't just wake up one morning and you decide that that's something you want. It's a decades long journey that we've been on. Now, once you establish yourself that way and you have access to this cheaper capital, which capital fuels investment and investment fuels growth. What that does is it creates an operational system and a strategic system and a transformative system within the business that investment is managing investment and risk of return becomes really, really important, because as you continue to grow, you have to maintain your metrics to continue to be investment grade. So when we think about how we prioritize our investments, it's whatever gives you the highest growth with the lowest amount of risk that you can actually take. And this capital structure that we've created for the company has proved to be very, very successful and has created a huge amount of resilience for the company.
And Ziad, while you're growing, and you said that 4 years, and we had a huge growth. Even before there has been changes. The group is growing. How is the financial strategy changing with that, and how changing with the size of the group, and at the same time changing with the times we are in?
Yes.
So can you explain that and how you manage that change?
So I'd like to divide that into multiple pieces. The piece number one is the investment strategy, right? The investment strategy, and we touched on it in the previous question, is all about managing risk and reward, and that's where the growth part of it actually comes in. So when we talk about growth, the two pieces of it are, you have to think about it from a growth perspective and a productivity perspective. The growth perspective is the investment side. The productivity perspective, when it's coming from a CFO, when I say productivity, the immediate reaction of someone is CF no. Is you're the guy who's going to cut costs and drive savings and whatnot. But productivity is well beyond that. Productivity, there is some of it, right? Optimization, cost savings, and what have you. But productivity, as a definition, effectively means if it costs me $1 to generate today, it should cost me 95 cents tomorrow.
Yeah.
So if you're growing your revenue, you just need to be growing your spending at a slower rate. So you could be actually investing, but you're just growing it. And that's the notion of productivity. Now, how do you drive productivity? You drive it through multiple avenues. We talked about cost optimization, and we do have horizontal layers in the company. One called Global Solutions, where think of shared services, technology, procurement, all the back-end systems that actually leveraging scale gets you there. So that's one layer. We have another layer of called Future Solutions. And think of Future Solutions driving productivity through creating catalysts for growth, data analytics, AI, technology tooling, customer value management, all these different aspects that when you think about are more customer touching than the cost savings in the background. And then a third layer, for example, and managing all these different parts of the portfolio is our loyalty platform. So how a single customer, so Abrar today walks into our mall. You're the same guy that's walking into the mall, that's walking into Carrefour, and shopping at Carrefour, both digitally and physically. Yeah. You're the same guy walking into Lululemon to buy. So how do I use that platform to be able to give you the best customized experience, personalized experience, to absolutely delight you and attract you to my asset versus any other asset within the market? Mm-hmm. So it's there's multiple layers to it, but it all has to come together to compete and win.
Mm-hmm. I mean, this is I would say very interesting to know, mainly on the shared services. Yeah, and when I spoke to a lot of business leaders, I think this drives a lot of value, but at the same time, it's very challenging to implement.
Yes.
Because you have different stakeholders, different organizations, and kind of providing shared services and agreeing with everybody is challenging. So how did MAF and you manage this part, creating a very efficient shared services?
It's exactly as you said. It's very challenging, and the reason it's challenging is because what effectively you're asking people to do is change their habits. So today you have, in your role, there's a certain way you do things. I mean, human beings, we're all creatures of habit. We put our toothbrush in the same place every day. If anybody moves that toothbrush, we lose our mind. So when you start your transformation journey, you have to lay out the art of the possible and what's in it for the organization, how everybody actually wins. And you have to lay out clearly not only how everybody wins, but what is required as fundamental things that are going to be the keys to success. And then when you're done with that, it has to be a top-down approach to actually force it within the organization. Because like I said, you're changing workflows. You're changing what people have done and has been bread and butter for them for 10, 15, 20, 25 years. So that's where it starts. It starts with planning. It starts with getting your top leadership bought into it. Then you drive the value by convincing everyone in the organization why this is not only good for the organization, but also good for them, to put them on that transformative path. And then you have to enable it. You have to enable it through investments that you need to make, because to make money, you got to invest money.
Yeah.
But there's no substitute to sweat equity and hard work. It's a grind. But all companies have been doing it for years. And if you don't transform, you die. And this is the way the system works.
Mm-hmm. Yeah, very, very good story on this. Now, my question on the emerging technologies.
Yes.
So, as a CFO office,
yes,
both on the group side,
yes,
right, and in the financial operations.
Yes.
How do you see the emerging technologies, and what are the top technologies in your mind that you see, look, this will transform the financial operation, and at the same time will have a lot of impact, be it on retail or be it on real estate or the malls?
Okay, so to say the least, they're transformative. So when you think about things as simple as fintech and other financial operations software, it's all transformative. But before you get into how transformative these emerging technologies are, there's a stack. There's actually a technology stack that has to come together for all of these to actually work. And it starts with designing the workflow that you actually want. And then based on the workflow that you have to figure out what data is required to fuel that workflow. And then and only then can you bring a transformative technology to put it on top of it for all of this to actually come to life and to be able to transform your organization. And I mean, you know this well. Imagine you're selling somebody an ERP platform, and people, like a lot of companies, think that, yeah, I'll just buy the ERP platform, just drop it into my system, into my company, and everything's just going to work Jim dandy. Well, that's not the way it works. The ERP platform de facto has embedded workflows in it. So for it to actually work, and you have companies where it fails. And the reason it fails is because companies want to implement their existing processes, which are archaic, into best-in-class type technological platforms. And then they come back and they blame the service provider or the strategic outsourcer. Yeah. But thousands of other companies it's worked with. The biggest issue that happens is exactly that, is when you want to bring in these emerging technologies into your company, you have to be ready to actually transform everything that you do to be able to enable those technologies to act as a catalyst to you. If they're ERP platforms, if they're AI, if they're advanced analytics, because then and only then can you really get to touching your customer. You take the data, and based on the data and the tools you put on top of the data, you start creating personalization platforms and what have you, fintech platforms to be able to create things faster. So it's emerging technologies are the future, and every company, any company that doesn't adapt this stuff is going to be left in the dust.
Ziad, a follow-up question. Actually, I have two follow-up questions.
Yes,
on
please.
this. One is specifically on AI,
yes,
which is kind of a big buzzword, and
yes,
we're seeing, a lot of impact, a lot of investment on that. How do you see AI both transforming the CFO office?
Yes.
And how do you see it, impacting the retail or, the customer journey?
Okay. I mean, AI is, let me just comment a few things on AI. If you go look back at history over the last 100 or so years, the biggest technologies that actually took off were the ones that drove productivity in systems. And back to my definition of productivity, this is not cost savings. This is it's scaling. How do I scale faster for cheaper? Go back to the Industrial Revolution. That was one, when machines started taking over labor. Then you move forward and you look at the internet, how that changed and how that drove productivity. Then you look at, there's 3 or 4 revolutions that happened. AI is exactly that. It is a tool that is going to drive productivity at massive scales. And this is why it will take off. Now, AI is, like you said, it's a buzzword. A lot of people use, if they have an Excel spreadsheet and they put in some VLOOKUPs, they consider that AI, right? AI is a continuum. It's like a scale of you get there. You start with basically simple data, then you get into data analytics, then you get into cognitive analytics, then you get into true artificial intelligence. Now, artificial intelligence of where it is today is still very, very, very expensive. And it's expensive for 2 reasons. One, the use cases to scale it are still rather limited. The second thing, and I think the more important thing, is AI is intelligence, and intelligence requires data, just like human beings. Yeah. And if you are not investing in your data layers, ensuring it's consumable, bringing in unstructured data, developing these large LLMs to adapt to it, it'll slow you down. But for us, thankfully, we've really invested in data over the last decade or so. We have over 80 terabytes of it. And we've created Math GPT, like we have our own GPT platform. Mm-hmm. And it's, again, the more it learns, the better it gets. But if you take AI in its larger context of data analytics and predictive analytics, we're using it across the board. Again, going back to you walk in and into one of our supermarkets, and we know your preferences. We can actually delight you. We can actually, at one point in time, we know your price elasticities, figure out what your willingness to pay for particular products are. And ultimately, you walk out a happy customer and we walk out as a happy company. So all these things we're actually working on in the context today. Artificial intelligence, we have used it. Like I told you, we've created our own GPT platform. And we've actually started some businesses that take into advantage all this data and all these analytics. And they've been doing pretty well for us.
Mm-hmm. And Ziad, you mentioned on operational efficiency,
yes,
having shared services and other things. Then we touched base on some on customer experience, which I think you mentioned, loyalty program,
yes,
where you take care and go into the details that if a person is going to watch a movie, will he get popcorn or how he'll have a better experience, and same in your other brands.
Yes.
What else and how you're leveraging technology to enhance that customer experience? Because the way I felt and the way I experienced that customer experience, I think is very important for MAF.
Yeah. So if you think about it, today, the digital world and the physical world, except particularly here in this region. And why do I say in this region? When I was having a discussion with an MNC recently. And one of the things they asked me is, I can't believe you guys still have malls and whatnot. But if you haven't been to Dubai, you won't understand it. Unless you've walked through MOE and seen that integrated experience, you won't really understand it. You won't and the example I gave him is, I took my kids skiing, and where they learned how to ski was in the desert. Before I take them on a ski trip. So when you think about that integrated experience, that's what we mean. Now, that was 10 years ago, and we still had that integrated experience. Now, fast forward, that integrated experience has gone into the digital world as well. So as a customer, when you walk in, you want that experience to be completely seamless. So one of the things we're working on is, think of, you have the Share app, which is our loyalty platform. You walk into Mall of the Emirates and you're shopping. You took a parking ticket. Now we have gateless parking. But using your app, imagine a world where Share knows that you've made purchases, and it immediately validates your parking because you've made a purchase in the actual asset without you having to go through that trouble of having to validate it. So that experience of the delighting the customer, where you're taking these pain points away from him by the marriage of the digital and physical world together, is how we actually think about these things. And as we develop these types of technologies and the digital world, this is how we see these coming together. But these require infrastructure, they require understanding of customers, they require you to understand how a customer's flow is within your particular asset at any given point. So this is the marriage of the digital and the physical all together.
Ziad, I mean, you had a long career in finance, right?
Yes.
What are the key lessons you learned? And as a CFO, when you wake up and go to office every day, what are the key metrics which you say, look, as a CFO and as an advice to everyone,
Yes.
this is what I think I look at least once in a day. These are the 4 or 5 things I look. Maybe it's sales per mall or per brand, or what's happening, what's the cost. So what are those metrics and what advice you give to other CFOs?
A CFO today is no longer a bean counter. It's that simple. You're a value integrator. And what do I mean by value integrator? And these are lessons I've learned. I remember earlier in my career, I was only based in Armonk, in where the headquarters of my previous company were. And some of the best advice I got was, before you sit down and advise people on how they should be running their businesses, you should go and learn their businesses. And I took a couple of international assignments coming out to be at the lowest logical level on the ground, because that's where the money is generated. That's where the revenue is generated. That's where the profit is generated. That's where the cash is generated. And once you understand that, in context of another piece of advice I got is follow the dollar. Once you understand how that dollar is generated, and when I talk about dollars generated, if you're a sales guy, as a finance person, if I understand how the incentive system work, I can do a lot better job in enabling you to do your job better. If I understand how that dollar is better invested in R&D to solve customer pain points, the better I am. If I understand how that dollar through the entire value chain flows, that's what you become as a value integrator. So instead of going in there and cadencing people on why they're not hitting their numbers, you actually become part of their solution. Not a CF, no. And it goes back to advice that my father actually gave me. I remember sitting at a table once with him and my sisters talking about something, and she's giving him ideas about how to solve a problem. And what I kept on doing, I was young, I was 12 or 13 years old. I kept on telling my sister, oh, that's not going to work, that's not going to work, that's not going to work. And my father turns to me and he tells me, do you have any solutions to the predicament your sister's in? And I looked at him and I froze and I was like, no. He was like, then if you're not going to be part of the solution, you keep your mouth shut. Yeah. So to really be in this day and age a great CFO, you have to be a value integrator and you have to be part of the solution and not the blocker. So if somebody comes and asks for something and it's within the realm of what you could do, you can say no. However, I suggest you do A, B, C, D, and this creates a win-win. So being part of that, and this is the new CFO that I believe we should all be moving towards. And I mean, it took me years to figure it out, but and I'm still growing and figuring it out. But that's how I think of it.
Yeah. It's a very, very good way that you defined that. It's about creating value and enabling the business, because I think as a CFO, you'll have a very good view on each business, on the cash flow, where it's coming, where it's going.
And fundamentally, I also have the responsibility. If I had that additional dollar of investment, where do I put it? And again, that's part of the value integration. I mean, it's not about making the dollar and putting it away. It's about making the dollar and making sure you're putting that dollar in the next place that gets you the highest returns to create shareholder value. And this is part of that value integrator, because to actually do that or know where to put it, you have to ask questions. You have to understand what the company's strategy is. You have to understand like what your risk is in these new ventures that you want to get into. So you have to know, you have to be at that intersection of strategy, operations, and finance. That sweet spot is where the next generation CFO always has to be able to drive that shareholder value and growth for a company.
Ziad, I mean, kind of a macro question, right? We're very, impressed by the leadership here in UAE, the way things happens. But as a company and as you have a view on the business, right, and different business, how do you see across the region, when I say, Middle East, Africa, wherever you're operating, where do you see significant opportunities in retail or in real estate or in the, lifestyle segment? And how do you see the region going in next, let's say, 5 years or 10 years overall?
Starting macroeconomically, I mean, when what's happening in the world isn't really, when you sit down and you watch Bloomberg or what have you on international markets, you see them, they've been struggling for the last couple of years. Thankfully, our region, when we say it's been immune, I wouldn't say fully immune, but it's been doing very well compared to the rest of the world. And this is not a fluke. This is by design. This is decades in the making. The regulatory environments have changed, especially in the GCC environment. It's a lot easier to do business in the GCC today. This is why you see a massive amount of influx of FDI, not only FDI, even intellectual capital coming into the country, wealth coming into the UAE specifically. You see it the same as Saudi. GDPs are some of the fastest growing in the world. Even from a human capital perspective, from a UAE, let's take the UAE human capital perspective, the Golden Visa program has been incredibly successful for attracting all these great thinkers and money to make the systems grow. Now, coupled with the fact that there's vision, every vision you hit, it was all up leading to Expo. And then before Expo even ended, you had the Dubai 33 plan. And the Dubai 33 plan is well on the way. So I'm giving you an example here. And this is an expansion of Dubai, of more population growth, which is going to require more real estate development. It's going to require more supermarkets. It's going to require more schools. It's going to require more technology infrastructure, more physical infrastructure. You go through all the things that are going to be required for actually this to come to life. This fuels growth across the board. And this growth is no longer, quote unquote, how people used to think about the GCC region as an area of oil. I mean, we're talking about non-oil GDP growing at some of the fastest rates globally. But we also still have challenges. I mean, you also mentioned Africa. Egypt is a country with great fundamentals. You have 100 million plus growing population. I mean, monetary policy is improving. It's not fully there yet, but devaluation is at 35%, which is really, really high. But even in an environment like that, you adjust. You adjust because you have local currency being generated. And we've actually invested in soft discount stores called Supicos. And as a CFO, going back to value integrator, as a CFO, I have a business model now that's been created for soft discount grocery retail, where the payback is less than a year for a supermarket. So, and this model has been working, and it's been adjusting to Egypt, where any capital that you generate, you invest right back into it to continue growing. While the monetary policy gets figured out, there's always opportunities in the markets that we have because the fundamentals are right. It's imperfect when you have, for example, the monetary policy in Egypt that's getting better. It is imperfect, but we're getting there. But the GCC though, the GCC has been even down to how COVID was managed. We moved, a personal story, we moved here during COVID. And for me, I saw the stark difference from moving from New York to Dubai. And it was another world. The speed with which it came out of it, and that's one of the catalysts that created the boom in the region we're in. Mm-hmm. It really, really is extraordinary.
Ziad, my last question, what's next for MAF, and how do you see, coming years, and what's the kind of the vision and how you plan to achieve it?
So for MAF, we have to continue this integration that we talked about, the marriage of the digital and physical world, is going to be a source of competitive advantage for us. And this is something we're going to continue to invest in. A case in point is we just launched a new business called Precision Media. And Precision Media is effectively a platform for digital advertising that leverages data insights that from first-party data that we actually have, and attract CPGs and what have you to be a lot more effective with the media spending that they actually have. And the only way you do this is by having the data infrastructure, the digital infrastructure, the technology infrastructure, and the workflows all defined to actually bring something like this to life. And a business like this, if you think about real estate physical assets, or you think about grocery retail, or Tilal al-Ghaf or what have you, they have good margins. But when you are starting to create businesses that take advantage of bringing all these different assets together at margins that are really high double digits, this is more of creating value from using what you have to continue to grow. Plus, there's, of course, extended investments. Like I told you, we talked about branching out into discount retail, hyper discounting models. Geographical expansion is within our strategic core markets. Saudi Arabia continues to be a focus market for us. Egypt continues to be a focus market for us. So I wouldn't say more of the same, because the same keeps changing. It's just, how do you bring all this together? Because the Gen Zs, before you know it, the ones that live and breathe on social media platforms, how are you going to create the best environment for them to come enjoy their time with us? And how do we create great moments for everyone every day, for them specifically, because that's going to be the next level of generation that's spending, right? So that's how I see all of this evolving. Companies are becoming data companies, and figuring out how to tackle that next natural resource to create a competitive advantage is the next step for us, and actually any other company in the space. And whoever gets there first is who wins.
Yeah. So data is the new oil. Yeah.
Data is the new oil. That's the best way to do it. Yeah.
Ziad, thank you very much for coming.
It's
a pleasure to have you. And again, it was a great conversation.
Thank you so much. Thank you.